On to Sappi, which is, again, a global producer of fine paper and chemical cellulose. Market cap here, 34.9 billion rand. Do you want to add anything before I go to price earnings ratio?
Well, it's interesting the way that was put. So fine paper, which is the coated stuff that's used for like annual reports, glossy magazines, but chemical cellulose, they say, is the future of the business. That's cellulose, which gets used in fabrics and other stuff. That's where they're trying to steer the business.
Price to earnings ratio, 10.7, a dividend yield of 2.5%. This has pretty much been the poor cousin of Mondi for a long time in the stock market.
Yeah, and I think everyone looks at it because they obviously went very aggressively into graphic paper, which really is for us a twilight industry. I mean, we've seen the trends in the magazine sales where it's primarily used, really coming under pressure. Also, I mean, especially if you look at its balance sheet as well. I mean, it's trading. I think it's on about a. I mean, its debt at the moment, I mean, Paul, maybe you can correct me, it's about $1.77 billion at the moment. And I mean, that works out to about, I think it's a 2.8 net debt to EBITDA ratio. If you look at someone like Mondi, that's sitting at a 1.1. So Mondi with a much stronger balance sheet than something like Sappi. I mean, guys saying about Mondi that they should actually be returning cash to shareholders at this stage, whereas Sappi is still aggressively trying to cut that down to about a ratio of 2. So, yeah, a little bit heavily geared, and also operating in a difficult position, but as Paul said, chemical cellulose really the future of the company, and that really coming to the fore as a high margin product.
So let's glance at the share price graph, and Paul, you can give us your thoughts.
Not doing so badly, actually. You know what's interesting about this is that the crushing debt load, they dodged a bullet there. The debt came from some aggressive acquisitions of mills in Europe, in part in order to try to consolidate an oversupply market. So in some cases they bought things like Imreal and so on and shut them down. But where I say they dodged a bullet is because the debt markets in Europe have been very favorable. So they've been able to refinance these like huge 3.5 billion euro dollar programs at like 4% and very low rates. So even though they had a crippling debt pile, they've been very lucky from this sort of ECB-induced easy money policy, which has meant that big investors have been looking for this kind of corporate yield, high-yielding paper.
That chemical cellulose, as you say, is the future of the company. Do you back it in that respect then?
I mean, I think they're doing all the right things. I mean, they've built that nanocellulose sort of pilot project in the Netherlands as well, and they're really looking for really to expand the usage of chemical cellulose as well. I mean, as I mentioned, it's a higher margin product than the traditional paper business. So, I mean, if you go down to sort of an operating profit line, I think it's already bringing in about 65% of operating profit. So it's definitely growing in the context. I mean, paper's still bigger in revenue terms, but definitely growing aggressively. And I think it is the future. I mean, it's what they've got to move into.
Paul, let's call this one, or do you want to add anything else before we go to hot or not?
It's just, I mean, if the chemical cellulose thing was an untrammeled, huge opportunity and they were like the only people on the planet that could produce it, I'd be more convinced. But to me, this has always felt like just another slightly different commodity market, and I can understand the shift, but I can't say I'm as enthusiastic that it is definitely a no-brainer home run to come, that particular business.
So you're not convinced, you're going with not hot?
Not hot for me, no.
Yeah, I think I'm also actually going to go not hot. I do think that chemical cellulose is the future for Sappi, maybe not the future for everyone, but yeah, also, I mean, they are right-sizing, they've sold off a lot of operations, so they're getting the business in shape. I mean, if we just go back to the debt quickly as well, and they've got that big, I think it's a $400 million dollar-based bond expiring in 2017, which they're going to refinance, which I think is optimistic.
And they'll be refinancing, as Paul was saying, at much more favourable rates.
Much more favourable rates. It's going to really, bring down their costs. But, looking at the group, I think it is interesting. It's one of those stocks that no one is really, no one looks at. But I think with the general sort of investor climate at the moment, with people looking for more of a value play, it might be one to consider. I mean, we still back momentum, so we'd rather go Mondi over Sappi. So I'll go cold, but it's definitely one. It's not an easy decision.
It's definitely done better than I would have thought ever in the last 5 years.
But you're still both not hot.